So lost in the debate over the Bitcoin ETF is the true legal status of Bitcoin, right? And the SEC has garnered, there's been a lot of discussion and dialogue regarding the SEC's action in not allowing the Bitcoin ETF. But much like the Bitcoin future, which I spoke about previously, there's a very valid reason for it, right? The pushback from the SEC, and that's the fact that the underlying spot markets, meaning the cryptocurrency exchanges, are unregulated, right? They're state money transmitters and money service businesses. Those aren't regulated. Those are a far cry from regulated securities exchanges, right? And so that's why you see so much manipulation within the market, and where there's manipulation within the market that can't be policed, why you'd have a regulated product like an ETF is questionable, right? It makes a great deal of sense. But what's hasn't really been brought up, and it's pertinent for especially hedge fund promoters, for Bitcoin-based hedge fund promoters, is the legal nature of Bitcoin, which is a commodity, right? For 5 years plus, Bitcoin has been a commodity. It's been anointed to be one by the CFTC. In fact, all convertible virtual currencies, basically all cryptocurrencies, have seemingly been roped in by the CFTC. Now you have this internal sort of push and pull with the ICO crowd and the SEC sort of taking the lead on enforcement, and people tend to think that the SEC has jurisdiction over all cryptocurrencies, but that's not the case, right? It's certainly not the case. Bitcoin, since the coin flip decision, has been a commodity. And so your Bitcoin ETF is something called a commodity pool, right? And a commodity pool is basically a mutual fund where the underlying financial product is a commodity or futures contract, right? And the obvious objective and purpose of going through the process of registration with the NFA, the National Futures Association, is leverage, right? When you pool investment, you can drive leverage, and you can conceivably make trades and financial positions that you wouldn't otherwise be able to do on your own. So that's why people invest. And it's a security at the level that, as an ETF, you're buying shares of this ETF, right? You're buying securities. But at its core, it's a commodity pool. So relating back to hedge funds, and many of my clients who deal in Bitcoin and are prop traders, arbitrage traders of Bitcoin, and even some OTC traders, depending on how you're structured, you may in fact be a commodity pool, right? And that's because the underlying product that you're dealing with is Bitcoin, which is, again, a commodity, not a security. And that's lost so often, and you see a lot of hedge funds run into problems because they're not registered properly as a commodity pool. And that registration process has some exemptions, right, to it, but they're very small. It's not like a Investment Company Act exemption, like a 3C7 or 12 that you see, where there's broad exemptions for, like, let's say less than 100 investors or something to that effect. The exemptions, the three exemptions, the de minimis exemption, the investment club exemptions, they really don't apply, right? They really don't apply to any real hedge fund, right, that you're going to run. So when you're structuring a Bitcoin-based hedge fund, what you are structuring is, of course, a hedge fund in structure, in corporate structure, and in financial parlance, right? In terms of having a management company, having the separate fund company, fund limited partnership typically, or LLC typically, that would own the Bitcoin, right, and be managed by that management company. But that fund is in and of itself a commodity pool. And you have to register as a commodity pool to be legally compliant because, again, the underlying contract is Bitcoin. The same goes if you're running Bitcoin futures. Now, if you were investing in security tokens, right, those are decidedly securities, and presumably you wouldn't have to register as a commodity pool. But it's something to consider, because as your fund gets bigger and you go through the machinations of having to register as an investment company or fund, that issue is going to come up, right? The issue of whether or not you're also registered as a CPO or commodity pool, and then the individual who promotes that commodity pool is a commodity pool operator, which is a separate registration in and of itself. So it's something to consider, and it's in the press and in just the general community. Like, there's a real, I think, misunderstanding of Bitcoin and this sort of willful ignorance regarding the fact that Bitcoin is a commodity, because you see so much activity by the SEC, but that activity is really based on the context of ICOs and tokens which resemble securities, whereas Bitcoin is squarely a commodity. So something to consider. If you are a hedge fund that actively trades Bitcoin as any substantial part of your portfolio, that CP registration is undoubtedly a direction you have to go. So hit me up if you have any questions. Happy to kind of walk you through the process, let you know what you have to do. It's Adam at Adam Tracy, TRACY.io, and I'll talk to you later.